This episode of the What the FinTech podcast is sponsored by IFX Payments. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Will Marwick, CEO of IFX Payments. Will, welcome to the show.
Thanks for having me, Paul. Excited to be here.
Excellent. It's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and IFX Payments then?
Yeah, sure. So I'm CEO of IFX Payments. I've been here for coming up to 8 years now. I joined originally as general counsel, so I've got a background in legal and compliance. And over the last few years, sort of moved into the CEO function, really at a time where IFX pivoted from being a traditional FX brokerage firm, offering sort of a typical spot forward contracts on a sort of telephone brokerage type model, into more of what I call a cross-border payments and FX fintech. So that sort of culminated through the launch of our virtual IBAN and sort of multi-currency account proposition that we call iBank, which is very much directed and targets the B2B space. And we sort of launched that back in 2020. And that's really been a sort of pivotal moment for the business, revolutionized us into that, as I said, into that sort of fintech space, and has really been the catalyst for growth over the last sort of 5 years or so.
Excellent. Sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be exploring the rapidly evolving UK payments landscape and the future of cross-border transactions. In particular, we'll discuss the challenges around cross-border payments for corporates and SMEs, how IFX is tackling friction points in international transactions, and how the FX brokerage market has evolved amid significant FX volatility in recent years. Looking towards emerging technologies as well, we'll also get Will's perspective on the growing traction of stablecoins in 2025 and their potential role in the future of international transactions as well. But to start off then, as mentioned, Will, the UK payments landscape has undergone significant transformation over the past decade. How would you describe the current state of play with payments in the UK, and what are the big changes you've seen, and what are the big trends you're currently seeing there as well?
It's a good question. I think we all sort of seem to have sort of similar takes on everything from sort of digitization and consumer expectations and sort of regulation, all these sort of big, I suppose, factors that we all have to take into consideration. But I think obviously the trigger point for me was sort of around about sort of 2008. People talk about financial crisis and things like that, but really the sort of the rollout of FPS, I think domestically for the UK was, I suppose, that trigger point around those sort of expectations around where can payments actually move in real time? What are our expectations around the way that we move money? And I think it's only natural for when consumers start to experience that domestically that their expectations then start to cross into that international space. And then also those retail expectations around how quickly their money moves then starts to transcend into the corporate space. And my money can move this quickly between sending a domestic payment between sort of, I don't know, father and son, mother and daughter. Why can't my money sort of get overseas that quickly? And I think that for me is sort of something that fintechs need to really consider around where the landscape is going, and really think about ways in which not only can we ensure that we continue to deliver speed for our consumers, but also in a manner that is data-led. And I think things like the integration of ISO 222 and the evolution of instant account-to-account payments through open banking, that really sort of starts to put that into focus. And I think for fintechs in particular, it's trying to think about how we can leverage those expectations, leverage those trends in a way that can move cross-border payments into the next stage of its development. Digital stablecoins, for example, are a great example of that trend. Thinking about how we can utilize blockchain infrastructure, ledger-based infrastructure to be able to move money overseas quickly, efficiently, but also utilize other capabilities such as artificial intelligence. So people talk a lot about AI around fraud prevention, operational excellence, looking at leveraging that sort of infrastructure as well, so that we can maintain efficiency and speed, but in a manner that gives our customers, it's not at the expense of trust, security, and tackling sort of financial crime.
So, yeah, and I guess on the cross-border payment side then, why are corporates and SMEs looking to payment solution providers to help with the challenges there, perhaps as opposed to traditional financial services providers?
I think cross-border payments have traditionally been seen as sort of slow, opaque, and I think costly as well, especially if you think about traditional correspondent banking. That often involves multiple intermediaries. Each one of those has its own set of delays, whether that's through its own checks, whether that's through data falling out of payment messages, understanding the rec on that payment, and then also the fees that sort of get deducted along the way. And I think consumers, as we sort of alluded to earlier, around that sort of expectation around speed and settlement, the transparency of that cost and that delivery, I think, is still limited to a degree. I think fintechs in particular have got very good at being able to become more transparent, let customers know where payments are. Things like Swift GPI, for example, has been a sort of unlocked that capability. And it's no surprise that Swift have now announced they're turning to a more blockchain ledger-based infrastructure, and that sort of announcement at Cybos earlier this year. But I think for fintechs, it's really about leaning into that speed, that predictability, that visibility, and looking at ways in which we can pull together more of a, call it a modern digital infrastructure, whether that's through connecting real-time payment networks, whether that's direct or indirect, whether that's through banks or other EMIs and PSPs, looking at liquidity, thinking about how we can help support on where liquidity sits in the world, and also looking at that sort of real-time sort of blockchain infrastructure. I think when firms are moving money international, you can't get away from things like the FX exposure. You can't get away from currency risk. And I think for us as a business, it's being able to pair those together and being able to talk to our customers around not just a product that allows customers to self-serve on FX and then consequently the cross-border payment that goes along with that. It's been able to help support them on things like risk management, but also sending their money. How long is it going to take to get there? Each country is different in terms of its data requirements, its settlement speeds. So how can we pull together the best infrastructure that suits our customers and our type of businesses that we serve, and not try to be just sort of like a big one-stop shop where we do everything brilliantly? It's impossible. No one can do it. So thinking about ways in which we can partner with the right firms, create and the right banks, and start to pull together a network that can really help the businesses that we look to service in terms of managing that money overseas.
Great. Yeah, and it'd be good to dive into that a little bit more. We've obviously mentioned a few kind of challenges with cross-border payments so far, but how has IFX approached solving these friction points for your clients then?
Yeah, so I think we've sought to build an infrastructure around sort of eliminating the pain points, specifically the business around that kind of legacy payment rails. So we very much focus on corporate SMEs, financial intermediaries, and financial institutions in terms of how our services. So our platform in particular is all about accessing multi-currency accounts, or alleviating the need to maintain multiple accounts overseas with different currencies at great expense, and lots of sort of operational management that goes with that. Being able to support with real-time FX conversion, being able to support on that sort of the currency risk of, are my payments going to go up tomorrow based on the latest tariff announcement, the latest, dare I say, tax hike that is sort of looming. And then also thinking about, how can I move my money overseas? So how can we connect domestic payment rails, cross-border payment rails, think about liquidity pools globally, think about real-time payment ledger capabilities through blockchain, stablecoins, as a means of pulling that together to give our customers the choice and the freedom to move money in a way that suits them. And we can do that through either a single API, or we can provide that through a digital interface. So the way we look to do it, so on the payment capability side, is, as I said, sort of partner with global liquidity and banking providers. So that allows us to create that network. But I think the other thing that we really try and focus on is compliance automation and risk controls, because it's one thing being able to have that network to allow sort of the real-time payments, but it's got to go hand in hand with the sort of compliance infrastructure. And we all talk about FinCrime and we talk about fraud, but you can only have speed if you have trust. And so those two have to sit sort of hand in hand. They can't be a sort of tension between the two of them. And I suppose what that means in practice for us is like, you can't build everything. So it's about partnering with the right providers who can allow you to leverage, whether that's sort of AI or blockchain infrastructure, whatever it might be, to ensure that you're doing all the screening you need to do, whether you're meeting all your regulatory requirements, you've got the infrastructure to maybe alert customers that there might be a fraudulent payment, or that you're not sure about the payment, whatever it might be, but it's not at the cost of speed and efficiency. So because you've got to be able to do the checks, but if payments are going out the door straight away, there's a tension there. So how can you build in an infrastructure that maintains one without the expense of the other? And I think if you can get that right, I think that's a very powerful differentiator for customers to know that the ecosystem that you're building is one that they can not just get their expectation around speed and transparency and visibility and cost and so on, but also they have the trust that you are screening payments in the way that is not just to be regulatory compliant, but also to protect your own consumers as well.
Excellent. Sounds great. How would you describe IFX's unique value proposition in the payment space then, and what differentiates your approach from other players?
I'd say our mission is to become the number one service-led alternative banking partner for businesses, financial intermediaries, and financial institutions. So I suppose we sort of sit in that intersection between payments and foreign exchange, and thinking about how we can add value beyond just the transaction. So from receiving the money, converting it, and paying it out. And whilst we had a product-led strategy, which is very much around the scalability of our infrastructure, that compliance robustness that I talked about, the way our platform is interoperable with other providers, a lot of those are really, in reality, are table stakes. So there's a lot of providers who do that out there. So what do we look to focus on? And for us, it's about complementing that product with and that operational infrastructure with a first-class service. And I think lots of fintechs understandably position themselves as product-led, self-serving models. And I think that works for a certain target market. But for us, we look to ensure that product is accompanied by instantly accessible experts. So people who understand the FX market, they understand the type of market that we're in. Is it bull market? Is it a bearish market? What does the outlook look like? What are the commentators saying? And I think what we're not is a business that you just go in and you just execute a rate. We provide the information around that to help support your business. We believe in that model where the service and the technology infrastructure itself go hand in hand. So you wrap that up together and it's a targeted offering. And it won't be one that fits the retail market, for example. It's very much designed for our corporate offering, but it's very much designed to afford that personalized client experience.
Excellent. And would you say the role of financial intermediaries in the payments chain is changing at the moment? And how do you see this evolution unfolding? And how is IFX positioning itself accordingly in terms of the products and services that you offer there?
I think it has been shifting. I mean, look, obviously, traditionally, it was all banking, correspondent banking in terms of moving money overseas. I think fintechs touched on and financial intermediaries themselves sort of emerged through the connection of those RTP networks as they've been rolled out internationally, looking at ways in which SWIFT as well as the SWIFT payment rails have been able to sit alongside of those, and fintechs been able to provide simple, product-led, easy-to-use infrastructure that is self-serving and is instantly accessible. It's light touch, it's intuitive. And I think that was sort of a real boom moment for the market. I think where it's changing again is through the implementation of sort of new technology. So whether that is blockchain, stable and crypto assets, artificial intelligence. I think the way in which people are getting comfortable moving money is now starting to evolve. And I think in our industry, it feels like the stable coin train is already bolted, the AI train is already bolted. But actually, in terms of the wider world, it really hasn't. And for us, I think as financial intermediaries playing in this space, I think being able to implement an infrastructure where we can give access to that sort of capability to the rest of the world is really where I see firms sort of needing to pivot. And I think just by providing that access and kind of supporting on a more relationship side and being able to provide that trust around these new capabilities, because invariably people get nervous around new technologies, and especially when it involves their money. So the more comfort you can provide, the more trust and security and infrastructure you can provide around that, I think it's only going to be to the benefit of fintechs in this space. So it's sort of that evolution from sort of fintechs replicating / consolidating and creating those network effects from old world. Now it's sort of really changing into new technologies and building that sort of maybe that information bank and that educational piece around the new capabilities so that the entire payments ecosystem can move along with it.
Excellent. And amid this evolution of the payments ecosystem, I mean, there's been a raft of mergers and acquisitions recently as well in the sector. Is consolidation inevitable as more players enter the space?
Yeah, absolutely. I mean, I think consolidation is a natural phase of any market. So I think the expectation is, I think we'll see more over the next 12 to 24 months. That I think as regulation tightens, that margins compress, the cost of doing business in a way that meets consumer expectations is going to go up. The amount of investment is going up. Operational resilience requirements and scalability requirements start to really come to the forefront of everyone's mind. So I think firms are going to be conscious about their funding. They're going to be thinking about their runway to profitability. And in order to meet those requirements, it's going to become tougher and tougher. So I do see there being opportunities for maybe larger firms to go and acquire, say, smaller businesses with maybe unique technology propositions that they can bring in-house. But I think there's going to be that sort of natural consolidation anyway of bringing revenue streams together and streamlining operational costs that sit within that in order to be more efficient as a firm. And so we've seen that through a number of the acquisitions in the market in the past year as firms look to leverage new target customers and new industry verticals that maybe another sort of complements, but also knowing that they can process payments through the same sort of operational infrastructure and run payments through the same. You don't need two of everything, right? So there's ways firms can reduce their OpEx and be able to sort of hit those revenue milestones and value requirements that are obvious requirements for whether it's PLCs or PE-backed firms or VC-backed firms and so on. So these are the things that are obviously going to come about. And I think for anyone entering the market, it's all about how are you differentiating yourself within the market so that you can be competitive, because that there are a number of players in the market who are just getting bigger and bigger and are going to be able to compress their margins to become super competitive, and they're looking at more of a value play. So it is going to become quite a dynamic space, and it'll be interesting to see how it does consolidate over the next 24 months for sure.
Excellent. Obviously, as you've mentioned, a big part of IFX's offering is delivering FX services, and we've seen significant FX volatility in recent years. How has this impacted your clients, and how has the FX brokerage market evolved in response?
Yeah, I think volatility has been quite a defining feature of the last 12 months, let's say. We've had traditionally quite a sort of stagnant market for a good few years, but obviously the macroeconomic uncertainty of everything from geopolitical shocks of war and, as I said earlier, sort of tariffs and tax hikes and so on can create a lot of volatility in the market. And what that means for our customers is something that's going to cost you £100,000 today might cost you £110,000 tomorrow. And if you don't have a proper hedging strategy to think about how you're going to manage that, I think you're opening up yourself to a lot of uncertainty. Now, a lot of businesses don't like to gamble on the market. They don't like, yes, the rate can improve in your favor, right? Of course it can. But also, I think for a lot of businesses, it's certainty is what they're after. And I think for us, what we're seeing with our customers is a lot of businesses coming to say, look, how can I fix this rate in the future? I've got invoices to pay over the course of 6, 12 months. How can I ensure that this doesn't move? So for us, it's thinking about ways in which we can help support that, not just by equipping them with the information around sort of outlooks and things like that, but also understand how we can give them greater transparency in terms of our pricing and how it all works, educating them, so sort of alluded to earlier, and also thinking about how we can automate that. So if clients are wanting to self-serve themselves, for example, through the platform, which they're able to do, they're equipped with all the information that they need to do that. So it's really about tailoring our proposition to the customer, thinking about how they want to manage their risk and being able to support them with that in the best way possible.
Excellent. And you've touched on stablecoins during our discussion as well. I mean, 2025 seems to have been the year of stablecoins, really. They've been seeing significant traction and a huge amount of popularity this year, with a particular focus on their role in cross-border payments. What's your perspective on their role both now and in the future of international transactions?
I think they're definitely the most promising innovation in cross-border payments that I've seen since working in this industry. I think that they offer instant settlement, 24/7 operability, and there are huge potential cost efficiencies for both businesses, institutional clients, and retail clients. So the opportunity there is enormous. Being able to send money from the UK to Australia in a matter of seconds and having that money instantly accessible is a huge way of managing cash flow, for example, for businesses, and the benefit that would lend to companies, especially in, let's look at something like shipping, for example, where the timing of payments is so important, so that There are penalties and ships get locked up, embargoed at ports, for example, of conduct. The support that we can give certain industries around cash flow capabilities is immense. So especially if it's entering regions, for example, where traditional rails are less efficient. So the upside of it is enormous. But I think there are still key challenges that we need to overcome with stablecoins. There's the regulatory clarity, I think, around that. I think there are a number of really positive attempts at being able to manage stablecoin regulation. But as with any new technology, that's going to evolve over time, and you're not going to be able to capture everything in one go. The nuances will start to come out, the exceptions will start to emerge, and we're going to have to be able to adapt and make those regulations really clear in terms of how we want to roll this sort of infrastructure out. But also you've got to think about how that's going to interact between different regions as well, and how they're going to all treat stablecoins differently. And the other challenge is trust in these assets. For us as an industry, we consider ourselves payment enthusiasts or whatever it might be, and we all want to adopt new technologies, and everyone's very open-minded. But I think you translate that into the real world, there's a lot of people out there that have heard crypto-based investment horror stories. There'll be all sorts of things that are out there. People will have their own experiences of that. And that's a huge thing we've got to overcome. I think, remember that term stablecoin, obviously still a digital asset in the same way that other sort of volatile crypto coins are. So stablecoin is a bit of a branding exercise, right? It's about giving people comfort that the currency is pegged, and it's pegged through sort of investing the money that you receive in exchange for that digital asset in treasury bills, so that you've got that security around the money. So taking consumers on that journey is going to be the next big thing to ensure that this technology does get adopted. The quicker we can educate and the quicker that we can build that trust from a consumer perspective of, has this been a means of payment? I think it's only going to lead the way in the future.
Yeah, no, it'll be interesting to see how it evolves going forward. Yeah, I guess to finish off here, I mean, looking ahead, what are the key strategic priorities for IFX Payments then over the next few years, and what industry developments are you most excited about?
It's a good question. I think for us, without sort of, I suppose, giving away the secret sauce recipe, I think it's about being able to think about how we scale up technology and payments infrastructure. So how can we support instant payments both on a domestic basis and a cross-border basis? That's, again, through that consolidation of that network, being able to continue to lean into that, but really thinking about the right sort of network for our target customers. So corporates, financial institutions, and financial intermediaries. The next would be expanding our global footprint. So we are licensed in the UK, Canada, and Dubai to provide payment services, but thinking about ways in which we can take that into Europe, thinking about how we can take that into the Far East, the US, and really sort of expand our global footprint over the next few years, and really be able to open up what has proven to be a successful product in a number of territories and open that up to wider markets. I think the next one is really thinking about our ways in which we can make our compliance infrastructure slicker, more automated, more scalable, thinking about fraud prevention, data-led risk management decisions, all that sort of stuff, thinking about ways in which we can more efficient in our checks and our comfort around payments that we're processing in a way that is without expense to speed and efficiency and our customers' experiences. And then, I think as I sort of touched on earlier, thinking about ways in which we can integrate things like stable coins, and thinking about ways in which we can build out that infrastructure to offer that real 24/7 instant settlement, cost-effective solution for our customers in the future.
Thanks again, Will, for chatting with us today. To close out the podcast, we have our now infamous Fintech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
So I think I would want to lock up the term synergy as a term. I think it seems to be a word that just gets bandied around quite a lot. And it's sort of one of those words that I think people use freely without really giving much thought to what actual synergies are being provided. I think typically it's vague. If you can't specify exactly what the compounding value is going to be, you can't measure it, then it's not a synergy. And so, that would be the word that I would look up.
Excellent. Yeah, this seems like a classic one for sure. I guess usually what I ask when we're throwing a word into the jail is what would you replace it with? What do you think we could replace synergy with when we're using it, I guess, in conversation?
Good question. I think you could literally just say, look, what's the compounding value add? I don't think you need to have corporate jargon and to make everyone sound a little bit more intelligent. You can actually just say, what are we getting for this? What's the compounding effect of this? So yeah, that would be my word.
Excellent. Yeah, well, synergy feels like one of the OG business terms that people had enough of a long time ago. So I'm surprised it isn't already in the jail, but this one is a no-brainer for me. I'm more than happy to add synergy to the jail this week. And I doubt very much if anybody will want to break it back out again anytime soon. But now, Will, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thanks for having me.
Well, that's all we have time for this week. Thanks, of course, to Will for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest fintech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.